Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Hump Day. It's Wednesday, July 10th. Hope you guys are having a great day so far. We got pretty much just one economic item here on the calendar, and that is the wholesale inventories for the month of May. So April, we had a pretty good month. They're at 0.8%. A lot of that, of course, was due to increases for the before the tariffs came in. May, however, was still pretty decent. Came in at 0.4% for the month of May. Later today, we'll have the FOMC minutes being released right around 11 o'clock Pacific Standard Time. Uh, Typically, this could hold a lot of weight, but today not as much, primarily because the FOMC was June 19th. Since then, we had some pretty big interruptions, like the job numbers last Friday. Uh, that's what kind of stirred the pot, so to speak, where people started wondering, okay, are we going to have the? It came in so good, unfortunately, good news was bad news for the investors, and they were wondering if if that's going to alter the Fed's thinking of possible rate cuts. So today, Jerome Powell is speaking in front of Congress and kind of eased a lot of those concerns. So we'll kind of jump right into it as we're heading into the headline news. Stock market, as a result, stock market is up. As I had mentioned, he's speaking in front of the House today, and basically, there is concerns about the economy as a whole slowing down, a lot of uncertainty going on. Whereas we have the inflation has been receding; it's been going backwards. They want the target rate about 2%, and now they're down to about 1.6%. So it's been kind of receding a bit of late. Also, even though the jobs have been pretty good and rebounding from consumer spending, but however, jobs are, it seems like a lot of employers are holding back on their investments inside the businesses. So this is what the Fed is kind of looking at right now. And as a result, it looks like the rate cut will probably be on the table. Maybe not the half a point one, but the quarter point most likely will be the most likely scenario. Potentially another one later in the year or beginning of next year type of thing could happen. So let's see how this is playing in the bond market here. Bond market is like in the news as we've been started the day below the 25-day moving average. Now we're up against our again our old nemesis, the floor, the ceiling of resistance. We had a hard time getting up there for a long time. We broke above it, came back down, broke above it, came back down, and now we're trying to go work our way up there. Right now, we're up about 14 basis points. We did try, as you can see with that little tip there, we were up about 17, 19 basis points, but we receded to about 14, so we're basically right at the line trying to work our way above it. Hopefully, we can keep that momentum and stay above this 25-day moving average. This might give us a little extra push to break above it in the future here. As you can see here, we got the 25-day moving average push yields down. They did try to work its way up above it. Now we're down to about 1.0. I'm sorry, 2.04. We still got this tough Fibonacci level here, which has now become a floor of support for them. So if we could break below that important one, that could help us get increase and improve rates over time here. And as you can see here, we had quite a bit of room here down to 1.92. Yeah, 1.92 basically. That's the next level down. So as a result, rates are a little bit better today after taking a little bit of a beating yesterday. So we're kind of almost at the stage before yesterday. So basically, almost like the same price of what we had on Monday. All right, so that's pretty much a wrap. Rates are about the same, and if you guys are looking to buy or refinance, I am a loan officer, so feel free to direct message me. My company does service all 50 states. We are home to the All-in-One Loan, Home Funded. All-in-One Loan is a fantastic loan program that can help you for those who have cash flow in their and don't live paycheck to paycheck, can help you pay off your mortgage much quicker. It's basically principal first in terms of payment. Home Funded is a great down payment assistance for either first-time homebuyers or people who had life-changing events. For somebody who went through a natural disaster, like here in California, we have our wildfires a lot of times, or in other places like the uh, hurricanes and tornadoes and stuff. They help get you started. Somebody who went through divorce, for example, could potentially use this, where one spouse keeps the house, the other one has to look for another property. And also, it makes a great wedding registry. So if you are looking to get married and don't really need all the plates and glasses and everything else, you'd rather have those donations or gifts go towards your home funded. people like that as well because they can use credit cards and stuff like that, and it's less paper trail and everything else. So, anyways, and on top of those two loans, we service everything else like everyone else. We have the jumbos, we have the conventionals with Fannie and Freddie, FHA, VA, USDA, and we have our niche loans that your big banks don't offer, like the investor loans to bank statement products that help out self-employed borrowers. And we got 4 national loans. So again, if you got a need for any of those, please direct message me, and we'll see how we can help you out. You have a great rest of your day. Thanks so much for watching. Catch you guys tomorrow. Bye bye.